October 8th, 2024. You can see that we basically got pretty close to the Globex high and we failed. So this is still a magnet above, but sometimes you get pretty close to the Globex high and you do not end up getting above it. The pattern, obviously, is a gap up. So we have a wedge, 1, 2, 3, or 1, 2, 3, however you want to draw it. And the target is a measured move up. So it's possible we have to get a little bit higher above bar 1 up into this area before any sort of reversal down. 1 has a tail on the bottom, so it's not quite as likely that it's the low of the day. There's probably buyers below, but it's pretty difficult to set a limit order to buy below 1. You don't really want to buy below a big bull or a big bear bar after a gap up. It's just not normally a great idea. I think that this ledge from yesterday, these 4 straight tops here, I think this makes it really likely, a lot more likely that we're going up here at some point today. So I do think we'll get up here. I don't know, I don't know if it's now, I don't know if it's later in the day, but I do think we're going up here at some point today. The hourly chart, you can see so we tested the sell climax high, basically the 2 o'clock bar from Sunday. It's possibly consecutive sell climaxes. You could argue, 1 pullback, 2 pullback, 3. Makes a little less sense, but 1 pullback, 2 pullback, 3, but the pullback went above the prior high. But it's some sort of consecutive sell climaxes for sure, and getting a rally to the high of the most recent sell climax, which is around here, the 2 o'clock high. So what if bar 2 closes on its high? It would be a credible swing buy for a possible low of the day. I think you could take it and basically just take a chance that we don't go below 2 for the remainder of the day. However, you have to keep in mind, you don't usually want to trade the first 6 bars of the day. You probably want to wait, see what happens. So while it would be a credible low of the day, it's probably better to wait. On the daily chart, you can see we've been in a tight trading range. And so the question is, how eager are you to buy right here? Probably not very. And how eager are you to sell? Probably not very. So the thing to keep in mind is we're pretty much in the middle of a tight trading range, the exact middle. So if you're buying the high of this bar, you're basically buying, more or less within a couple of ticks, the exact middle of this tight trading range. So we're in the middle of a tight trading range, which decreases the chances that we're going to get some sort of trend day and increases the chances that we're going to get a trading range day. You can see 15-minute chart rolling above the moving average. So again, if 2 closes on its high, it is a credible swing trade, but probably just better to wait for higher probability. What are the odds if 2 closes on its high that it's the low of the day? It's probably like a 1 in 3 chance. If you take that buy, let's say 2 closed on its high and you took the buy, you would pretty much just walk away for an hour. There's no real reason. There's no real management. You put a stop below the bar, unless you wanted higher probability and you wanted to scale in. You could do that. So probably buyers below 2, scaling in lower if we get below 2. Or sorry, once the bar closes here. Looks like it's going to be a doji bar. The close of it is a bit important. So consecutive bear closes, 1 and 2, but it's really not all that great. Are we always in short? The bears probably need one more bar, because I think if we get any sort of bull bar closing near its high here, then we're probably always in long. But if 3 is a bear bar, then I do think we're always in short. Do you sell below 2? Well, 2 had a ton of overlap with bar 1. So what does that tell you? It tells me that traders were more interested in selling maybe a 50% pullback of the bar than they were in selling the actual bar. So really not as great as it could be to be selling below bar 2. Probably going to lead to a deeper pullback. What are the odds we've seen the high of the day? It's probably still reasonably low. I don't think we have. Maybe 30%. It's better than 20. Any given bar on the chart has a 20% chance of leading to a trend reversal, and bar 1 has a 20% chance on any given day of being the high or the low of the day. With the context today, maybe it was a 25% chance, but wasn't too much higher than 20. We're probably somewhat in the middle. Not quite, I suppose. What if 3 closes on its high? It'll kind of be the same thing. Low probability high of the day. Oh, sorry, low probability low of the day. Probably not. If you're a bull here, you don't want this bar to get any bigger. You probably wanted it. It's already probably too big. I think if you're a bull, you probably wanted this bar to be about this size because you don't want to buy above bar 3 if it's an outside bar because the risk is kind of big now. And you're hoping for a possible low of the day, but there's only really like a 30% chance that you get it. So if this bar closes down here, let's say it closed right here, well, you're only risking 4 points and you're trying to to make sure that it's the low of the day. So if it's a 30% chance and you're risking 4 or 5 points, then it's a little bit more reasonable to take because increased chance that you get 20 to 25 points, something along those lines. However, and that's 4 to 1, 5 to 1 risk reward. So that's reasonable with a 30% chance of success. However, if you're buying above bar 3, it's now an outside up bar, trading range behavior, and a lot of overlap with 2, and 2 is your signal bar. So now your risk is like 7 or 8 points. And so in order to even break even, you're going to have to make it 20, 21 points, which is somewhere up here. In order to make this a profitable trade, you're probably going to have to go for, something like this, 30 to 35 points rather than, 20 points. So that's what increasing the bar size does. It makes the risk reward worse. So it's really going to be not as great to buy above 3 as it could be had we no had we not gone outside up and had the bar states. So what are the bulls hoping? The bulls are hoping this is essentially going to be a second leg down. We got a gap up and then 1, 2, pull back above this. And the bulls are hoping this is a second leg down and we're going to get a high 2 buy on the open. High 2s and low 2s in the open are really common patterns. But the problem with a bull bar would be you've had 3 straight bear closes. So it's hard to look to buy above a bull bar after 3 consecutive bear closes. So bar 3, not really all that great for anybody. You can see the bulls bought it up so that we at least had a bull close. And what that does really, if we had a bear close here on bar 3, it would be harder to buy above bar 4 if it was a bull bar. But now, if bar 4 is a bear bar and then 5 is a bull bar, it's a better looking high 2. So then the bulls would want a bull trend from the open and a high 2. Bears, you can see we sold off at this sell climax. So look, bar 54. The thing about, quote unquote reasonable buys is any chart on the market is a reasonable buy or sell if you can use the correct stop and scale in. And so buying the close of bar 54 yesterday was not a good idea. However, there are algorithms that are just programmed to buy bull closes if they close near their highs and use wide stops and scale in. And so some of them, let's say they bought the close of 54 yesterday and they looked at the contract, right? So they say, okay, well, this is the bottom of the trading range, and I'm buying a bull bar in the middle of the trading range. Not really great, but I also know it's a trading range. So if I use a wide stop and scale in, I'll probably be forgiven. So those traders have a wide stop, maybe a measured move down of the whole trading range, 100 plus points below. They're buying more, down here. They're buying more down here, 20, 30, 40 points below. And then bar one, we gap up and look, the rate where those bulls bought, they kept scaling in. Maybe they didn't scale in these bear bars. Maybe they'll scale in a fixed number of points, 20 points, 40 points, 60 points below. Or maybe they'll scale in only above a bull bar closing near its high. Maybe, I don't know, 67. Maybe they scale in the Globex session. And whatever they're doing, when we get back to that bar 54 close, they were selling out of their longs. So bulls want a high 2 on the open here. What if 4 is an inside bar? It's an IOI pattern. So inside bar 2, outside bar 3, and an inside bar 4. Would be good for the bulls. Still breakout mode, but increased chance of the low of the day. We might get a wedge pull back to the moving average. Maybe 1, 3, 7, or maybe this isn't even 2 yet. Maybe it'll be like 1, 5, 11, something like that. You can see any bear who sold below 2, hoping for a collapse, didn't get it on 3, is disappointed in buying back shorts, causing 4. So IOI pattern bar 4, breakout mode, reasonable to buy above 4, reasonable to be long right now, taking a chance we've seen the low of the day. A lot of traders bought more of a pullback as bar 5 was pulling back. So instead of buying above 4, they're buying as it pulled back with less risk. Bar 5 is unable to close above the bar 1 high. So I think that's pretty important. It slightly decreases the chances that we've seen the low of the day, but it's still very possible. I do think that ledge, 20, 23, 24, 26, 27 yesterday is where we're going to be headed. But I'm still going to wait. We are getting a lot of overlap with the bars. Bar 5 overlaps bar 4 a lot. You can see we have this right here, open gap. I would not be surprised if bar 6 is a bear bar, closing somewhat near its low. I still think we're going higher, but the market will often try to trap you out instead of just going straight to your profit target. So I wouldn't be surprised if we got a bear bar closing near its low, trying to trap traders out. This bar is pretty important considering the fact that bar 5 was unable to close above bar 1. Traders want to see bar 6 close above bar 1. I did not buy above 4, but had I bought above 4, I think I would be scalping half with 10 points if I was able to get it. So bulls are looking for a breakout here, a strong breakout, and they don't have it yet. Still always in long, I think, and probably more bullish than bearish. But, as bullish as you might think it is, look at the price action, right? Bar 5 overlaps bar 4 a lot, which decreases the chances of a strong breakout. Bar 5 is unable to close on its high and unable to close above the bar 1 high. So while it is bullish, it's definitely a swing trade if you're long. If we test back down, we might test the resolve of the bulls. So we might try to test into this area, into this area. So there'll be buyers below 6 if we go below 6. It's kind of hard to buy the close of bar 6 because bar 7 is a bar that can lead to big moves up or down. We haven't really seen that much. Obviously, it's a new month, and we haven't seen it too much on bar 7 as of recently. So if I was long, let's say I bought above bar 4, would I be doing anything? No, I mean you're just taking a chance that it's the low of the day, so there's no reason to really do anything right now. You can't have any sort of break even stop because it's still too likely that we're going to test back down to the 3 high or the 4 high. Again, though, if we go below bar 6, there's going to be buyers. Bears are hoping this is the top of the trading range and we're just getting a bull leg in a trading range and or just a second leg from the gap up, right? I don't know if they're expecting a full leg one leg two, because that would be relatively high up here. But if you look, it's in the same area as the ledge. Still okay to be long, holding long. We're going higher. What are the odds that we get? This is going to get a second leg, 70, 80% chance, I would say, at least, that we're going to get a second leg from the rally from bars 3 to 6. So some bulls bought the close of 6, hoping for a second leg up. This is, the second leg from the breakout. So this is a leg 1 breakout. Measure move will be up here. Seven, a good looking bull bar. Again, we're going to get a second leg up from this. We might pull back a little bit first. Seven's a bit climactic, so maybe we pull back to the bar 7 low. But there'll be buyers there if we do. You can see bulls were so eager to buy the close of 6 that we never even traded a tick below. So if you had set a limit order to get filled rather than a market order, right? Rather than just hitting buy the market or stop order above. But if you had set a limit order to try and get filled on the exact close of bar 6, you would not have been filled. So you still wouldn't be in that trade. Shows a sense of urgency from the bulls. We still have an open gap with the 6 high and the 3 low. I think that's pretty important. Regardless of if we pull back first, we're going to end up going higher. I think we're going to the ledge, like I said. We're going to go up to here and test it. Where I do not know the path that we take to get there. You can see we tested back to around the bar 7 close. Bulls were willing to buy. Pretty eager to buy. We're only a minute or two into the bar, and the odds were it wasn't going to turn into a giant bear bar. So bulls interested in buying on a limit order around that price. So what do you do if eight's a bear bar closing near its low? Well, it's going to be a minor reversal is the thing to keep in mind. Let's look at a lower time frame for a minute. Let's just look at, let's just say these couple of bars, like a 2-minute chart. My point is to show how seven's a bit climactic. Suppose it doesn't show as well here. Let's look at a 1-minute chart. See, look at the biclimax here, right? When you get a biclimax that's this climactic, bull trend would have started here. You have a head and shoulders bottom. Bull trend starts, and then you have a climactic bar here, and 60% chance when you get that biclimax that you're going to get one more leg sideways to up, which we get, and then you're probably going to try and test the bottom of the subclimax. Sorry, the bottom of the biclimax, which would be this bar, and that low. You can see we try to test it on that bar. My bar counter is all screwed up on that chart, obviously, because it's designed for a 5-minute chart. So 8, the large tail on the top. You can imagine the close of bar 7, we're going to get back to that close because the bulls who bought the close of 7 might be more interested in taking some profit, or sorry, scaling in and then exiting because they're disappointed with how 8 looks. But I mean, it's not really that disappointing though. It's obviously a little bit disappointing, but it's really not all that disappointing. So probably going to be buyers below 8. Would you ever sell below 8 and feel good about that trade? Probably not. I wouldn't mind at all if we sold off a little bit. Let's say we close this gap right here. So I wouldn't mind at all if we sold off a little bit and then got some sort of second leg up from this, some sort of delayed second leg up. You know that we're going to get back to the close of bar 7. It's really, really likely today, but you just don't know if we're going to pull back deeply first. But I don't think we're going to pull back that much. I mean, you would not sell below bar 8 and expect to make money, I guess is the way I would put it. If you put yourself in the shoes of a trader who is short right now, who sold below bar 8, what are you thinking? You're thinking you're probably going to lose money. So we still kept the gap open with the bar 5 high. Probably going to be sellers above 8 if it's a bear close, but tricky to sell above a high 1 after this many consecutive bull bars. Should be buyers, like I said, below 8, scaling lower. What are the odds that 8 is the high of the day? Well, what are the odds we've seen the low of the day? I'd say probably pretty 50-50. On the close of bar 6, It's 50-50 chance you've seen the low or the high of the day in general. So, however, it's not like we went up that strongly after bar six, right? We went up on bar seven and we're pulling back on bar eight and nine. So I still think 50-50 chance we've seen the low of the day is pretty reasonable. If you look, we went down on bar eight, and then we pulled back on bar eight, and now we're going down again on bar nine. So it's one, pull back, two, right? So it's possibly a two-legged correction on a lower time frame. It's still going to be a high one. So let's say, so negative bear bar is bar 10, but still always in long. If the bears can get a third bear bar on bar 10, sorry, negative bear bar is bar 9. If the bears can get a third bear bar on bar 10, it'll probably be always in short. But we shouldn't get a third bear bar strictly on the basis that if we do, it'll be always in short. It'll flip to always in short. So you can see, we have big tails on all these bars, and there was overlap. So it was not quite as likely that we were going to get, this was going to turn into a huge bull trend immediately. We're still going to get back up here. The question is when. If 10 is a bull bar closing near its high, it's going to be a high one buy, which you can take the buy for sure, but you cannot buy at 10 and put a stop below 10. You have to buy 10 and put a stop below 3. Again, I do think we're going to get a bull bar here. It's not a bull bar. A disappointing bear bar is fair. So let's say 10 is a doji bar. Not like the 10. 10 and flip it to always in short, really, if it's a doji bar. General rule of thumb in a trading range, or sorry, in a trend, you don't usually get 3 closes against you. If you look yesterday, we got 3 bull closes here, but this was still in the trading range. 48 was basically the breakout attempt into a bear trend. And we didn't. When was the next time we got 3 bull closes? We didn't for the remainder of the day until over here. If you bought above 4, are you still long? Yep. Just holding and taking a chance. Thing to do. Okay, so 10 looking like it's going to be a bull close. Disappointing bull close wouldn't be that surprising. I think, if it closes like this, like a doji, it's not worth buying. If it closes on its high, it's you could take it with a wide stop, but I think the overwhelming thing to look at is while this is a good leg one, and we're going to get a second leg up from it, there's a lot of tails and a lot of overlap. So it's not a perfect bull trend. So it might be more of a leg in the trading range. The question is where it's the high. It's possible we're developing a wedge, bar one, bar bar seven, maybe bar 15 or something like that. So what if 11 is an inside bar? Well, if it's an inside bar, then you know it's a high one still, not unreasonable to buy above. But you still have to keep in mind you're using a wide stop if you're buying up here, and the management could be a little bit difficult. So probably better to just wait. If you're long, it's still okay to hold long. So 10 is the high one. It's now triggered. Probably get a second leg down from 8 and 9. It's possible that the tail on 11 is the second leg down. So 11. So 10 is the high one, like I said, and you can't buy above 10 with the stop below 10. Still haven't touched the moving average yet today, so it's possible we get a wedge pullback to the moving average. But no one really wants to buy above 10 anyways, since there's a big tail. Possible it's a high one at the top of the trading range. I still think we're going higher. I'm just not sure when. Look at like a 15-minute chart. Bit of a bull surprise here, so should go a little bit higher. This probably isn't going to work selling below this, so we'll probably get up here into that ledge. Another peek at the hourly chart for context. Surprise here should get a second leg up. This might be start of the second leg up, but this is big enough for its own second leg. Again, it's a bit of a surprise, and we rallied up to the sell climax high. So this was a target. and you can see we tested back to it. And this is going to be a target, the open of the sell climax high. What's after that? Well, probably the next sell climax. This high, 57.94, is going to be an area of resistance. Twelve closes on its high. We're still on the high one above 10. So the bulls who bought, the high one, we haven't traded below 10 yet, which is probably an area where smart traders are scaling in. We might get a more complex pullback. It's possible this is that 9 and 10. This whole move down here is probably possibly a first leg down. And so maybe we pull back and then get a second leg down. So a little bit of a bigger, more complex leg one, leg two. And this is the problem with, when you look at the market and you think buy the close bar 7, you're not technically wrong. It is a buy the close bar, but you're probably not able to scale in the way that you need to in order to make that a good trade. Even if 12 closes on its high, I would still think a wide stop is better. If you're buying above 12, you're still risking buying high in a trading range. The bears might need a more complex second leg down. We're in an area where there's a lot of trading range price action yesterday, so I'm not surprised we're getting it as well today. This whole area, a lot of trading range price action. And, the general overall picture, trading range, we're getting towards the upper third. So granted, we're getting towards the upper third, but the upper third can be all the way up here. So, we might still need to go higher. I still think we're getting to this ledge today. I do not think, I think 4 is the low of the day at this point. I'd say probably 60% chance, maybe 55. But, if we get pretty much one more good bull bar closing near its high, that would really increase the odds that 4 is the low of the day. 12 isn't worth buying above. It's bad follow through for the bulls. So 10 is the high one, 11 is the follow through, not that great. So 12, bulls trying to get more follow through and hope that 11 is a breakout pullback. But we traded above 11 during 12, making 11 your signal. Not really that great. And the ball has a tail. So we might get below 12 before we get up to the ledge. But I ultimately think we're going to, while we might pull back, we're going to end up going higher. So if 13 closes on its high, can you buy it? Yeah, you can buy it. And just, it's always in long consecutive pull bars, and we're staying above the moving average. We have an open gap here. Bears who sell above the high of the breakout mode pattern, expecting to be able to scale in and make money. We have a small negative gap here, the overlap with 10. Or you could just say we have an open body gap here, which we do. Either of those is fine. So we do have a couple open gaps. You could argue this as well. It's an open gap. The strongest open gap when, let's say we gapped up above the high of Monday and we held above Monday's high. So the traders who sold above the prior day's high weren't able to make money. So those are the strongest open gaps, I think, because the prior day, it's a daily chart signal. So if you have an open gap on a daily chart signal, that, an increase in strength there. So consecutive bull bars, it's looking like 12, 13. Can 13 close on its high is a good question. If you bought the close of 7, you're probably not thrilled with how this trade has gone so far. It's going to pull back if you buy the close, but sometimes, traders will buy hoping that they get, a quick scalp. And when they don't get it, they'll scale in, whatever, maybe 50%. Yeah. So look, the 50% pullback, 3 through 7. Traders know 3 through 7 isn't the world's strongest rally because of all the tails and overlap. So they buy a 50% pullback during bar 10. When we rally back to the close of 7, there's probably some sellers. So what if we get another reversal down here? It's possible it's a second reversal down from the top of the trading range. You have to exit longs if, 14 closes on slow. I don't think so. I think, let's see. Bulls who bought above here needed it to go to 80.25 scalp. Oh yeah, they easily made their 10 points. So if you're a bull, I think you exited half with 10 points. Or I think that's what I would do at least. We haven't touched the moving average yet, which isn't a huge deal, I think, right now, considering the gap up. But let's say it's another 15 bars and we still don't touch the moving average, then you could be looking at, the opposite of yesterday. So I'm pretty resistant to selling right now because we're not getting below the moving average very often, or really at all right now. So 14's a bull close, it'd be 3 straight bull closes, which again is increased odds of a second leg. $14 doji bar. So does it technically follow through for the bulls? Yeah, but how great is it, right? If you bought the close of 13, you were hoping for urgency and a quick upside breakout, and you didn't get it. So increased chance that that we're going to go a little more sideways here. We might be forming the top of a trading range, is something to keep in mind. So bull surprise here. A lot of the bulls who bought above 4 able to make 20 points pretty easily at this point. Probably have exited most of their trade. We traded above yesterday's high on the daily chart, but it's a bear bar. So not too surprising that we found sellers. We obviously tested back into the ledge, which was important. Possible that we're starting a bull trend day. But we're going to need more follow through. Or really, we're going to need to not close this gap. I think this gap with the bar 7, the bar 8 high is important. So if we don't close that gap, it's very possible we're starting a bull trend day. Where do we go? I don't know. Well, the monthly chart, we're probably going to trigger this high, the 827. So we might end up rallying back up to that area. What if 16 is an inside bar closing near its high? It's a possible buy. We might have to, I'm going to wait for a pullback because I think we might pull back, try to pull back to at least the bar 7 high. This is a new breakout, 15, 16. Possible leg 1. But I don't think the buy is the 7 to the 16 high. You're probably going to want to buy it with a pullback. So really strong looking bull bars here, but I think this is too climactic. So it is a leg 1 breakout on 15, 16, but you probably don't want to buy the 16 close. You probably want to buy a pullback. I think, if we get a pullback to somewhere in here, I'm just curious if we keep this gap open. If we do, then it's easier to look to buy. Okay, so 17 is the pullback. So if 18 closes on its high, then we're clearly making an effort to keep the gap open. You can buy just taking a chance that we keep it somewhat open at least. What's your target for this if this is a bull trend day? I think last month's high, 30 or 40 points above, and we're probably going to trigger above it this month. So if we're going to get a bull trend day, something 30 to 40 points above seems like the logical area. So if 17 closes on its high, I'm probably going to take the buy and put a stop somewhere down here. Basically, if we close the gap, I'm going to start to look for an area to get out. But as long as it stays mostly open, I need to be seeing a strong bull bar closing near its high. Premise B, it's a high one in a bull trend, which it might be. But again, you need a good looking bull bar. Probably buyers below 16 scaling and lower, but they might scalp. So if 18 closes on its high, I'm just going to take the buy with a wide stop. And if we close the gap, then great. I'll look to get out. And if not, then I'm pretty much just going to hold probably most of the rest of the day. If 18 looks like this, or doesn't close near its high, I'll just keep waiting. Once we get a bull bar closing near its high, I'll buy. And if we never get one, then nothing to worry about. Doji bar on 18. So it's a high one buy above 18, but a doji bar. Not really a great buy. Probably sellers above scaling in, but that's a dangerous game. If this is going to be a bull trend day, there will be another bull bar closing near its high at some point, so I'll just buy that whenever that is. The seller's above 18 during 19, but probably just a scalp. For a second leg sideways to up. Again, if 19 closes on its high, if you're buying, you're just kind of taking a chance the gap stays open with the bar 8 high, which isn't an unreasonable thing to do. The bar 15 low is a buy climax, so the buy climax low is a magnet if this is a trading range. But it's very possible it's a bull trend. Granted, if it is a bull trend, we're probably going to go sideways for a little while before we before we start to go up. The context is decent. I wouldn't be surprised. It's possible that this turns into a big outside up bar, right? When we go above this high. So if you sold below here with a stop above here, you're probably going to get stopped out. It's one of the reasons why I think this high, the 5830 area is a target, is that it's a limit order market on the daily chart. So the traders who sell above this high scale in are going to make money. Hourly chart, you could buy this close. We might pull back, but some traders would buy this close, just taking a chance we continue to rally. So could be a first leg down. 20, 21 could be the start of a second leg down. Then again, it's all about the gap right now, I think. Could we get a good looking bull bar closing near its high before we close the gap? Moving average is coming up as well. We haven't touched the moving average in all 18 bars yet today. So, bull trends will oftentimes force you to buy what looks like really high, but at the end of the day, there's so much left of the bull trend. So if 20 is a bull bar closing near its high here, that's closing near the 16 high, it's still a buy. Even though you feel like you're buying really, really high in a possible trading range, you might actually be buying reasonably low in a bull trend. Probably like 80 to 90% chance we've seen the low of the day. Something in that range. So bulls, they want a rally and a bull trend day. And the bears are probably looking for some sort of midday reversal at this point. The bears need to close the gap and get the bar to the moving or the market to the moving average. Really, what they're trying to do, but could be a sideways pullback. So maybe we get 2 or 3 legs sideways. When you say a pullback, you think sideways to down, but you have to remember that sideways is an option. Occasionally, in a really strong bull trend, you'll get a pullback that kind of moves, slightly upward slope. Should be buyers below 20, scaling and lower. Bears hoping it's below too short, but it's not gonna go well. We're selling below that. Selling a tight trading range in a potential bull trend. So 21 bear bar so far. And this is the pullback that the bears wanted, so it's really becoming about the bar 8 high. Are we going to get there? If we do, it increases the chances that we get back to the 15 low, the moving average, and maybe form some sort of lower high major trend reversal. We would need a deep pullback to maybe the 15 low and the moving average, and then the market. So if we go down, then we need a bounce, and then a lower high somewhere over here. Maybe about 40 42 is which is the midday reversal. That's a potential area. But it looks like the bulls are giving up, and we're going to get back to that bar 8 high. I think if we get there, odds of bull trend are dramatically reduced. With your gap, bulls pretty much need 22 to look like, 21 yesterday, something like this. But it's probably not going to happen. So the gap, we just touched that high, so we did not quite close the gap. Let's go one more tick lower. You can see, what some bulls will do is they'll buy right here and they'll just put a stop one tick below the high. So basically just taking a chance that the gap stays open. And they're trying to make 10, 15, 20 points and they're only risking, a couple ticks. So very low, very, very low risk and very, very high reward, which means very, very low probability. So those traders would have just gotten stopped out. So we still might go higher, but not sure how much higher. Still an open body gap, so we still have multiple open body gaps, but not quite as strong as it could be. And the bulls would need to convince me that we're not getting to the moving average for another 20 bars. We're probably going to need to get close to the moving average and then get a good looking bull bar in order for me to be interested in buying. I'm not really interested in buying 22. It looks like it is a high too, but it looks like it's in kind of a bad location. Twenty-two closes on its high. Probably not worth selling, or sorry, probably not quite worth buying unless you can use a wide stop and scale in. But tough to sell above a second reversal up when we've been in basically a bull trend so far today. So looks like it's going to be more of a doji close. Bull doji, bear doji. If it's three straight bear bars, again, that's pretty disappointing for the bulls. But it's hard to buy with a bull doji bar at this point. So I think we're going to the moving average here. Not really much to do for me at the moment. I think the best trades in the day, really the only trades in the day, were to buy above 4 or buy the close of 6, looking for a second leg. Those are both reasonable. 15, 16, probably not worth buying. The breakouts, the pullback's going to be deep for your second leg. So if we do start to get another bull bar closing near its high, it's possible that we just don't get to the moving average and we start a bull trend day. However, I think the gap would have stayed open if we did. We're going to do that. So 24, a bull bar, but not able to close on its high. We're staying above the moving average, but it's not in a very moving average is usually the moving average is relatively flat but sloped if it's going to be a bull trend. And we did close this gap, which is disappointing. So I do think we're going higher. I don't know how much higher, but it's possible still that we get a bull trend even with this. This is a very small, it's a negative gap, but the Bears had one chance if they sold, and they had one chance to get out. So it's not really all that great for the Bears. So it's still possible we get a bull trend here, but waiting for a better looking bull bar. All right, that's going to be the video.